Guaranteed. It's one of the most powerful words in the financial world. It's a promise that, in a universe of uncertainty, your money will be safe. But in investing, we're taught a simple, unbreakable rule: there are no guarantees. The higher the potential return, the higher the risk you have to take. It's a fundamental trade-off. So when a platform like StashAway enters the conversation, and you hear the words capital guaranteed, it's natural to pause. It almost sounds too good to be true. It forces you to ask the question, is StashAway Capital truly guaranteed? The answer, like most things in the world of money, isn't a simple yes or no. It's a nuanced yes, but only for a specific product. And understanding the difference between that one product and everything else they offer is absolutely critical to your financial well-being. Let's break it down. When people talk about StashAway's capital guarantee, they are almost always referring to a specific cash management solution known as StashAway Simple Guaranteed. This is not a typical investment portfolio. Instead, it's a way for you to earn a fixed, guaranteed return on your cash for a set period, with zero risk to your principal. So, how is this possible? Simple Guaranteed works by investing your funds in a fixed deposit with a partner bank that is regulated by the Monetary Authority of Singapore. This structure is what allows StashAway to offer a genuine guarantee on both your principal and the promised interest rate. You choose a lock-in period, be it 1, 3, 6, or 12 months, and for that duration, your money is locked away, and your return is fixed. The rate you see is the rate you get, and you can't lose money on it. This is a stark contrast to StashAway's main business, their investment portfolios. These are the portfolios most people know them for, the ones built using their proprietary economic regime-based asset allocation, or ERAA, strategy. These portfolios, which invest in a diversified mix of global exchange-traded funds, ETFs, are subject to market volatility. The value can go up, and it can go down. There is no capital guarantee here. Your returns are entirely dependent on how the underlying markets perform. This is the classic risk-reward equation we discussed earlier, applied in a modern, automated way. So, when you log into your StashAway account and see a variety of investment options, it's vital to recognize that only the Simple Guaranteed product offers that capital protection. Everything else, from their general investing portfolios to their thematic ones, carries market risk. Beyond a single product, it's also important to consider what safeguards are in place for all your funds on the platform. This is where StashAway shines. All client assets, whether in a guaranteed product or a market-based portfolio, are held in segregated, custodian accounts. What this means is that your money is kept completely separate from StashAway's own operational funds. In the highly unlikely event that StashAway were to go out of business, your assets would be untouched and easily reclaimable, as they are not on the company's balance sheet. Furthermore, StashAway is a licensed and regulated entity, overseen by a major financial authority like the Monetary Authority of Singapore, MAS. This oversight adds another layer of security, ensuring the platform adheres to strict financial and ethical standards. With that said, thanks for watching, and until next time.